Hello, and welcome back to Explain the Charts, your go-to channel for no-hype technical analysis. Today is October 18th, 2025, and we are taking an in-depth look at Litecoin, or LTCUSD. There is a massive amount of news and speculation surrounding Litecoin right now, primarily centered on one major event, the potential approval of a spot Litecoin ETF. We're going to break down all the news, then dive into the charts to see how this is all playing out in the price action. First, let's get into the headlines because the sentiment is palpable. Multiple sources, from CoinJournal to Benzinga, have been highlighting the Imminent ETF decision as a major bullish catalyst. Bloomberg ETF analysts have even stated that approval is largely a done deal, citing Canary Capital's amended S-1 filing as a key indicator that things are moving forward. This optimism has fueled some incredible price action, with reports from about a week ago showing Litecoin surging over 10% to break the $130 resistance level, all while Bitcoin and Ethereum were pulling back. However, the path hasn't been straight up. Just over a week ago, the market saw a brutal plunge, with some sources reporting a 23% crash that wiped out recent gains. This volatility has created a fascinating battleground between long-term bulls and short-term bears. On one hand, we have analysts targeting $200, $400, or even an astronomical $750 in the long run, especially if the ETF is approved and institutional money floods in. On the other hand, some technical analysis warns that if key levels aren't reclaimed soon, we could see a further drop towards the $76 level. The delay in the ETF decision, partly due to the recent government shutdown, has only added to this uncertainty. So we have a classic scenario, a massive, highly anticipated fundamental catalyst clashing with volatile, uncertain price action. Now, let's see what the charts themselves are telling us. Looking at the daily chart, we can see the story of the last year has been one of major swings. After bottoming out in the summer of 2024, Litecoin went on a massive run towards the end of the year, peaking just shy of $150. This was followed by a significant correction through the first quarter of 2025. Now, let's zoom in on the most recent and dramatic price action from the last few weeks. You can clearly see the run-up in late September and early October, which was driven by that intense ETF speculation we just discussed. The price surged from the low hundreds of dollars all the way up to a high of nearly $136 on October 10th. And then, this happened, one of the most volatile daily candles we have seen in a long time. On October 10th, the price flash crashed from a high of $136 all the way down to a low of about $55, before aggressively bouncing back to close the day at $97. This was a catastrophic liquidation event that shook out countless positions, likely triggered by a combination of overleveraged traders and uncertainty around the ETF decision timeline. This single candle tells a story of extreme fear followed by immense buying pressure at the lows. Since that massive drop, the price has been consolidating, essentially trading sideways in a range between roughly $85 and $100. To get a better sense of this recent consolidation, let's switch to the 15-minute chart, which covers the period from October 12th right up to today. This chart shows us the price action after the big crash. As you can see, it's been a choppy ride, with the market trying to establish a new range. We see a clear attempt to rally on the 12th and 13th, pushing towards the $100 psychological level, but failing to hold it. Following that rejection, the price bled downwards over the next few days. On October 16th, we saw another significant leg down, with the price dropping from the $96 area to find support near the $90 level. The price has been wrestling with this $90 to $92 zone for the past day. This price action reflects a market in equilibrium, waiting for its next major signal. The bulls who bought the dip are defending their positions, while the bears are trying to push the price lower, capitalizing on the broken market structure from the crash. From this short-term view, we can identify some critical levels. Immediate support is clearly being tested right now around the $90 mark. If that breaks, the next area to watch would be the lows of this consolidation period, around $84 to $85, seen on the daily chart. On the upside, Initial resistance sits around the $95 to $96 area, which was the support level before the most recent drop. Above that, the major psychological and technical resistance is the $100 to $105 zone. Reclaiming the $105 level, as mentioned in the news analysis, would be a very strong bullish signal, suggesting the correction is over. Until then, we are stuck in this range, waiting for either the bulls or bears to take decisive control. Let's pull back to the daily chart one last time to frame our scenarios. The bullish case is straightforward and overwhelmingly dependent on the ETF approval. If and when that news drops, it's highly likely to act as a powerful catalyst. A confirmed approval could see Litecoin quickly break the $105 resistance and begin a journey back to the pre-crash highs around $125 to $135. From there, with sustained institutional interest, targets of $200 and higher this cycle become entirely plausible. The strong bounce from the $55 lows shows there is significant demand at lower prices, which is a fundamentally bullish sign. Now, for the bearish case. The biggest risk is an unexpected denial or a very prolonged delay of the ETF. This would likely shatter market confidence and could send the price tumbling. A break below the current consolidation support around $85 would open the door to the $76 target that analysts have warned about. Technically, the market structure was broken during the crash, and until the price makes a convincing higher high above the $105 resistance, the bears still have a strong argument. Broader economic weakness could also act as a headwind, pulling risk assets like crypto down regardless of specific news. So, to recap, here are the key price levels to watch. Our major support zone is between $85 and $90. A break below this could see a test of $76. Major resistance is the formidable zone between $100 and $105. A confirmed break above that opens the door to targets of $125 and $135. Now for some unbiased predictions, keeping in mind the overwhelming analyst consensus. Scenario 1. The bullish case. The ETF gets approved. I would give this a high probability, around 80%. This would likely trigger a rally to reclaim the $100 to $105 level quickly, reinforcing the likelihood of a move toward $130. Scenario 2. The bearish case. The ETF is denied or significantly delayed. I see this as a lower probability, around 20%. A break and close below $85 on the daily chart would be the first major warning sign that this scenario is playing out. The most important thing to watch for is, without a doubt, any official communication from the SEC regarding the Litecoin spot ETFs. This will be the primary driver of the next major move. Thank you for watching this analysis on Explain the Charts. Remember to like and subscribe for more in-depth chart breakdowns. Please be aware that this is not financial advice. The cryptocurrency market is extremely volatile, and you should always do your own research before making any investment decisions. Trade safe, and we'll see you in the next video.